Okay. All right. So welcome everybody to the live stream session. Okay. So yesterday, I don't know if y'all were awake when this happened. I know certainly I wasn't, but never mind. Later we'll get Ethan, who was awake when this happened. Okay. All right. So FOMC basically, can you? Let me just make the screen bigger. So you can see FOMC basically held the rate steady, so they didn't increase the rate. But one important thing that Jerome Powell did for all of us is that they gave us a bit more hint. He said that, there's progress on inflation, and he basically said that rate cut is on the table. That's the exact word he used. So I think you can read here. Right. So he used a term, say, on the table. Where is it? Somewhere here. Okay. All right. So right now it gets everyone very excited. So yesterday, if you look at the S&P 500, all right, wow, we had a good day. We had a 1% S&P 500. Now, you know what is even better? Okay, the Nasdaq, all right, so the tech led the rally yesterday. Tech was actually up by close to, this is weekly chart. Let me just bring it back, okay? Tech was up by close to 3% yesterday, okay? And you can see, in fact, today, pre-market is already up again, all right? So this is a tech-led rally, okay? Now, however, having said that, right, guys, what do y'all think? So Nara said, not surprised, exactly. Okay, so what do y'all think likely gonna happen? Do you think that Jerome Powell will cut rates in September or not? Yes or no? Type in the chat. Yes or no? Do you think Jerome Powell will cut rate in September? Okay. All right. So a lot of you all say yes, Joyce says probably, Xavier says no, Edway says no. Right? Okay. Most of you all say yes. Okay. So in order to understand it better, all right, we'll bring on our resident interest rate expert, okay, and also mortgage broker from Unbeatable Mortgage, Ethan. Okay, let me bring Ethan on, and I stop share first.
Hello
Hello.
everybody. Hi Pete, thanks for having me again. How are you doing?
Yeah, good, good, good. Okay, Ethan. So last night I
Mm,
wasn't up, so you were up listening to Jerome Powell's speech, right?
mm.
I also read the transcript. So maybe you give your spiel about what's your takeaway from this FOMC.
Okay, my takeaway from this FOMC, right? Basically lah, he said that he's going to hold rates at 5.33,
Mm,
and he said that the rate cuts could be on the table. So it's not
mm,
guaranteed, but he says it could be on the table depending on incoming data. Actually, tomorrow the unemployment data is gonna show, which is going to be a very big factor. At this
mm,
point of time, 4.1 for unemployment, which is still within range for all of them. And at this point of time, if they hold for longer, the likelihood of the interest rate and the inflation shooting back up again becomes more and more unlikely. If
mm.
they cut as soon as possible, then if inflation shoot up, then they have to hold it there for longer again.
Correct, correct, correct.
So if the GDP looks good, the unemployment looks good, because they got two jobs only,
Mm.
maximum employment and price stability. You
Yeah,
can't have maximum,
PCE at 2%,
yeah,
yeah.
these two. And at this point of time, it came down from the 2.8, 2.6, and now it's still 2.6, which is a very, very bullish sign, which is why he says that it is on the table.
Mm,
However, Jerome also says that it depends on the trend. Not
mm.
looking, they are looking at data trends and not data points.
Correct, correct.
So 1 or 2, 2.6 in the PCE is not going to
Mm.
make them convicted enough to cut straight away lah. However, it will then add to their thesis whether to cut or not.
Yeah, yeah, yeah. So guys, actually, right, I don't know whether y'all remember, those of y'all been following me a while, you know that Ethan and I, right, have a running bet,
Mm,
okay,
September.
about interest rate cuts. So, basically, I'm saying that there will be a cut in September. And Ethan is of the view, based on what he just said, he's saying that there will not be the cut. Okay. And
No lah,
what's
50-50 lah.
okay. I mean, that's what he said. That's what he said.
But our bet, I am putting my bet on not cutting.
Not cutting, correct, correct.
Mm,
We bet how much? We bet $10, is it?
10块钱, yeah.
$10. Okay. Now I feel like
Mm,
increasing the bet, okay, but never mind.
eh.
Okay. So not $100, not $100. $10, $10. Let me look at
Okay,
my wallet.
okay.
Do I have a $10? Okay, okay. So okay, it's just $10 on the line, just $10 on the
Mm-hmm.
line, okay?
$10.
Jasmine say
10
10
stocks,
stocks. Wow, depending on what stock.
depending on what stock.
If
Yeah,
it's NVR, then wow, then they'll be very happy. Okay, Berkshire A shares. Wow, wow. You ready now, Ethan?
not really. No,
Okay.
like I said, 50-50, but I
Yeah,
think
50-50.
it depends on the incoming data lah. And at this point of time, I think it's quite the nail biter.
Mm.
But last time I already said $10 that I'm gonna stick to my bet.
Yeah,
And
yeah.
yeah, let's see how it goes.
Actually, I now that okay, so previously, right, when we had this bet, right, Ethan, I don't know whether you remember, it
Mm,
was still the time where people are very uncertain whether there will be a rate cut, right?
correct.
So back then, the talks about a rate cut was totally not on the table and everything. And I was saying that, based on the movement, I think September has a very good chance. So that was when we had the bet, right? But right
Correct.
now, actually, I kind of partially agree with you, because inflation seems a bit good under control. The unemployment rate still not too high, right? A little bit they
Mm,
spike out a little bit, but it's not
yeah,
too much,
4.1 lah.
right? So
Mm,
to me, it's actually there is no impetus for Jerome to cut the price.
yeah,
Okay. Sorry, cut the interest rate. Wow, I
yeah.
call Jerome like he's my friend. Okay, but
Uncle
the
Pao.
yeah. But the idea is that now, to me, is like you're trying to prevent the pot from boiling, right? So you
Mm,
put down the temperature, right?
mm,
But I'm thinking left brain, if I'm him, right, I might want to keep the lid on a bit longer, just in
same.
case, if I'm a bit too early and I release the lid too early, the thing just boil over, inflation just shot up again. Wow, then that will be disastrous, man. It will really offset all the 12 months of effort
Mm,
of me of Jerome Powell trying to cut inflation. So I think that might be in his mind as well. But of course, we know it's election year, and since the whole market is anticipating that he's gonna cut, so every meeting leading up to the September one, right, he will still play along with it, because he knows that everyone watches what he say, right? They
correct.
even scrutinize the script, they compare the two script and like look for differences in
Could and would
nuances.
and
Yeah,
whatever,
yeah,
all this. Yeah, yeah,
yeah.
yeah, yeah.
Change in words and stuff. So he's very savvy, and I don't think he will suddenly, even if he wants to hold further, he wouldn't
Mm,
suddenly just tell people, hey, September hold. Because if he does that, guys, what's going to happen to the market? The market's going to react very violently to the downside, right? So that's my thinking. That there's actually, I kind of agree with you that there's a good chance. And another thing that got me a bit worried that I might lose the bet, okay, that I will lose this $10 to you, is that the the fact that back then when we do this, right, most of the people are not thinking about interest rate.
mm,
Everybody was very negative. But
correct.
now it seems to be the consensus, really,
Mm,
right? So to me,
correct.
I usually don't like to be part of the consensus, right?
But
If
now
I'm
it's
at
starting to look like
Yeah,
Abuden,
so
right?
now it starts to look like somehow the consensus that is going to cut, like what Naresh said, the Fed Watch 2 shows that it's 100% percent rate to cut. To me, is this when everyone is so certain, right? Wow,
Mm.
actually, I'm very, very worried.
You know what I think might happen? Big brain
What?
move. I think the big brain move that Jerome Powell's gonna do is that he's going to hold on the he's going to hold for next
Mm,
month,
yeah.
but in the projections he cut.
Mm.
So in the future one he will revise down, but he will hold to day one constant.
Wait, say again. He will hold September
You know,
constant.
so for example, like when they are coming out with their projections, they usually have like, hey, what's going to happen end of this year? What's going to happen end of next year? What's going to happen end of following year?
Yes,
So I
yes,
think
yes,
the
yes.
next year one gonna drop, and then the following year one going to drop. But then the thing is, he may just hold constant on the 5.33, and then the rest let them drop, and then in December or when the data actually shows. But a lot of this is wagering on unemployment lah. If tomorrow unemployment we see 4.5, all bets are off.
Mm.
But at this point of time, it still looks quite healthy. Non-farm
Yeah, yeah,
still
yeah. Correct, correct. And
everything look
yeah, everything
okay.
looks pretty healthy. There's no real reason for him to say, hey, let me just go and cut because unemployment spike up, that kind of thing.
Mm,
And another thing, I just spoke to one of the hedge fund guys, right? And
mm,
he got me thinking, he's basically saying, hey guys, because it was a round table, like all the portfolio managers come together. So he was saying, actually, guys, there is also no real reason for Jerome Powell to cut ahead of election, right? The best move going into an election is not to move, is to keep status quo and because he's not supposed to be political,
Not
right?
supposed to.
So if he does a move, he might be seen as political. But if he doesn't do anything, he just like, let's just go into election. I'm not going to make any changes first. Let's vote first, right? That's actually maybe the best path for him. Politically, right? Okay, this is not a political channel, but I'm just sharing what I heard on the portfolio manager roundtable, right? That hey, actually to Jerome Powell, is there an incentive for him to be a smart aleck and cut rates before election? No? Doesn't seem like it, right? So now that I think about it, I'm like, oh my dear, I think my
Nail
$10,
biter, nail biter.
my $10 in danger.
It's okay, it's okay. We play with fire.
Okay. Hey, but having said that, a lot of you guys here are also property owners, right? Who are the property owners here and you're worried about mortgage rates? Okay, can you type in me in the chat? Okay, how many of you here are looking at mortgage rates? Okay, type in me in the chat. So Ethan, on your side, matching the US rates and also the Singapore bank rates, have we seen any changes? Maybe can give us like a quick spiel since 2 months ago or when we had our last session. Any changes to the local rates?
All right, because 2 months ago we were talking about the FOMC actually projecting up. Let me go over to the slide and maybe share it
Oh yeah,
first.
yeah, can. You can share
This way,
okay.
talk with data easier.
Mm.
Share screen.
I love it. I love it when I have guests come on, right, and they do their homework, right? They bring data. Right? The saying goes, in God I trust, the rest of you bring data.
Awesome. So this was the latest projection, which was in June, right? So I want you all to take a look at the projections increase at the bottom right. Okay, everyone can see my slides, right?
Yeah, can.
Excellent. So as you can see, right, the 4.6, right, correct, got moved to 5. Wait, 1 second. Pen. So the 4.6 got moved to 5.1, and then the 3.9 got moved to 4.1, and then the 3.1 stays the same, correct? But more importantly, this number at the back moved from 2.6 to 2.9. This is more important because this is longer run. So what I predicted was that interest rates locally will go up a little bit, and it actually did. So for $1 million, last time we are able to get 2.8% for $1 million. Right now, you can get 2.83.
Oh,
So
so it actually went up.
a little bit.
Oh,
A little bit.
Interesting.
Correct.
Okay.
So after that, then I predict from now, I think from the next time when we speak, which is probably September, likely it's going to either stay the same or start to decline, depending on what's going to happen in the market.
So it actually went up because the Fed funds rate was revised upwards. So
Correct. The projections
the
and
projection
everything.
for future rates was revised upwards. So the bank acted early in advance.
Correct. Correct. Because at the end of the day, the banks also have an economist that are reading all this data. So hopefully when we do it one day before, we get a slight advantage above. One day right after the FOMC, you guys are able to get like some slight advantage over the bankers.
Oh. But last time when the interest rate hike, wow, they hike even faster, I realize. I remember.
Yes, correct. The interest rate hike, they hike even faster because they don't want to lose money.
Yeah. And guys, especially now, right, with the interest rate slowly coming down, the impact on property market and also the stock market is not to be overlooked. Right? Property market right now, I mean, because I work with Ethan, a lot of my one-on-one clients goes to Ethan for mortgage advice, right? Wow, I can tell you the number of people now looking at property, I would say on the ground increased by about 20%, right? That's the effect. That's the effect already. Right? I think it will continue to go up further. And for the stock market, right? This is something that I always talk to Ethan about. It's like, money always flow. Lah. So now that all the money market fund, your FD is gonna be, yielding less and less interest rate, guess where the money is gonna flow towards? Right? The easiest way to flow towards is gonna be the stock market and the property market. Okay? All right. Okay, come. Let's see what other analyses you have.
Okay, so this is what I had for us when
Mm.
we were doing last month. For you guys who didn't come, these are my projections on where Sora is likely going to be based on a very high correlation with Sibor. Sora versus
Sorry.
effective federal
Yeah,
funds
Fed
rate.
funds rate. Yeah.
Over the last 19 years, there has been 94.47% correlation. And what I do is I bring it forward towards Singapore context. I purposely use squiggly lines because nobody is able to predict the future, including Jerome Powell himself. So I believe this is the likely path forward, but with a 63% confidence, not too overconfident because projections do change and people are able to um have to adjust accordingly lah. All right. So this is one out of the three parts of helping our clients save money. We look at helping them with their strategy, helping them in terms of knowing when to what to do, whether to refinance, whether to reprice, to structure the thing, and finally make sure the rates are important lah. For the strategy and structure, it's more personalized, whereas the rates I can share with you guys more open lah, so that everybody is able to know.
Currently, Ethan, there's one DM that one person DM me. Currently,
Perfect.
what is a best rate to take, a fixed or a floating?
Best rate to take. Okay,
Or better option of the two, lah. I guess that's what the question is.
excellent. I love this question. Okay, so we say at this point of time, the SORA is plus 0. There will be an additional spread of 0.5. Okay, we stick with us here. Okay, so 0.5 plus SORA, right? So at the end of this year, correct, 3.49.
Yeah.
Remember the fixed rate is about 2. My apologies, 2.85 there, about 2.85, 2.83. We be conservative, we use 2.85. We look at 0.3 plus 3.9. Let's just say there is one rate cut. Okay, that's 0.5 plus 3.49. That's going to give us 3.99. If we look at 0.5 plus 2.81, this is the expected rate by the end of 2025.
Still 3.3.
Still 3.3. So I think over here, there is a significant buffer about 0.55 basis point. And the next point over here, 2026 is 2.1, but by then your 2 years fixed already up already. So at this point of time, of course, we are in a public domain and we are not able to make any recommendations.
Yeah.
However, right, this number looks nice.
Yeah. Hey guys, so for those of you who are looking at property, do take note that the fixed rate is only for resale property. That means buildings that's already structurally there, right? If you're buying something that's building under construction, then there's kind of no choice lah. You have to take the floating rate. Okay. But it's a very unique phenomenon that fixed rate now is lower than floating, right? In the past, it has never been like that, right? So for those of you right now, okay, so you cannot recommend, okay, but I want to help my community. Ethan, I give you a hypothetical scenario. Okay, so let's say hypothetical. So let's say I borrow 1.2 million. I need to borrow 1.2 million, for example.
Okay.
Right. So more than the $1 million threshold.
Okay.
Would you suggest I go for a lock-in rate or floating rate, or is that somewhat like a hybrid? I don't know.
I would think at this point in time, hypothetically, for 1.5% looks great. Yeah. Quite a lot of savings.
Yeah. So right now the fixed rate is like 2.8, 2.85, right?
Yeah, 2.85. Like you see in this situation, hypothetically, $1 million, 1.2 million, quite similar. So the choice of getting the right fixed rate, right? Or like the wrong fixed rate, right? The wrong rates, you would pay a little bit more, like 20 over grand. This is if you are choosing the Sora rates. And the thing is, it's going to come down, so it's going to probably be about $10,000 of additional interest, which we want to save for our clients.
Right now, for the 1 year repricing is only for 1 million and above, right?
$1 million and above.
If less than 1 million is a 2-year fix.
2 years only.
Or 2 years only, no 1 year.
No 1 year. Okay. Nobody going for 1 year anymore.
Okay, can. Okay, so guys, depending on your situation, now while it looks like, now fixed rate very cheap, you must lock it in first, lah, right? Right, you must lock it in first. There's the reason why the fixed rate now is cheaper because the banks are thinking that going forward, the rates going into 1 year later, 2 years later, it's going to cut faster than where the floating rate is. That's why they put at 2.9, right? So they are also not silly on, okay? So you just have to look at your situation. What I would suggest is get on an appointment with Ethan and his team, right? And let them understand your situation. Because while currently our hypothetical scenario seems to be that, hey, you take a fixed rate, seems good, but it also depends on what you are going to do with your property. For example, do you want to sell it soon? Right? If you want to sell it soon, maybe you don't lock in for so long, right? So there are a lot of different hypothetical situation, okay, that you might be in. Okay, so the best way is to get on a consultation with Ethan, right? Ethan and his team are very experienced. Even myself, my loans, I also let them to take a look at my loan, and they are doing my loan for me. Okay.
Thank you, Pete.
All right. Okay. Some of you are asking me how to get Ethan. Okay, come. Let me just share the screen very quickly. Okay, so this is the QR code. Okay, the link is over here. Maybe I copy this link and put in the chat. Easier also. Okay, so this is only for the Invest with Pete community. If you all would like to, you all can scan the QR code now, or you can actually click the link in the chat. All right, so it's rebrand.ly/unbeatable loans. So this is a free look consultation. I always call it a free look for Ethan and his team to take a look at your portfolio and suggest and see if there's any room for improvement. And one thing I really like about Ethan's team is that they are very professional. If they look at your situation and say, hey, there's no need to be nothing to need to do, they will just tell you there's nothing to be done. Right? They won't just push you to go and make a change just so that they can make a commission out of it. That's not how they do it. And I like how they do it because in this case, actually, they are also playing the long game, right? So once you are ready, your portfolio is ready for the next move, then they know that you'll come back to them because now that you trust them, really, right? Okay, so over here, once again, the QR code is over here, rebrand.ly/unbeatable loans. All right, I put the link in the chat already. Okay, great. Okay, so right now, let me go into part of the segment about stock market. Okay, so let me go into the stock market. Okay. Wait, let me just bring up the Telegram also because some of you are DMing me on Telegram. I just want to make sure I don't miss anything. Okay, all right. Okay, so let's go into the stock market first. Okay, so looking at the QQQs here, right? Okay, so guys, you all can see right now, actually we are at a very nice juncture. Okay, very, very nice juncture. My property portfolio is heading upwards. Okay, and thanks to Ethan, I also refinanced to a good rate. And right now, my stock portfolio is ready to go upwards. Right? Previously, there was a dip here, and this was actually not unexpected. It's very welcome. And I don't know whether you remember in the last live stream, I was also saying that, hey, just watch out for the bounce. And right now, we are seeing the bounce. Can you see that? It's a very, very predictable trend here. The MACD starts to curve upwards, right? Your stochastics is starting to do what needs to be done. The RSI is starting to tilt upwards already. So these are all very, very good signs. Okay. And one thing I want to share. Hey guys, by the way, if you have questions, just put it in the chat. One thing I want to share is that in the last session, actually someone did ask me that, hey Pete, because back then it was like that. It was like somewhere here, right? Okay. And they were like, hey Pete, should I sell? It's like going down, it's like going down. Now, the thing is this, although I know that it will eventually bounce, but I am not someone that will advocate selling out your investment too early. Okay. Right. This is something that I discussed with Ethan a lot about psychological impact of an investor. Because if you sell at this point, right, and right now, okay, the market has since gone down and bounced up already, right? You will be trapped in a psychological trap. You'll be thinking, hey, should I enter now? Right? Because I already missed the bottom already. Okay? Should I enter now or not? If I enter now, if it drops some more, then how? Right? But if I don't enter now, it already gone up a bit, it already go up some more, how? Wow. Right? So you will put yourself in the trap, right? So I always say, don't try to forecast the future. Just look at the chart in front of you and trade the chart that's in front of you. That's it. Okay. Now, while I use the word trade, I'm usually not a trader. I'm more of an investor. Okay. And for me, I like to collect shares. I like to collect call options. Okay. So just as some of you are asking, hey, is it a good time to look at long call options? Now, I'm not here to give you advice. Okay. None of what I say here is advice. Okay. Even those of you who are in my stock market genius online course community, right, where I share with you my exact trades, what do I do, what is the long-term investment that I'm doing, what's the short-term trades that I'm doing. Just remember, none of these are investment advice. It is meant for you to use it as a reference and say, hey, this is what Pete is thinking. Why is he doing certain things? Right? I want all of you here, if possible, to not just learn to get the fish, but also learn how to fish it yourself. Very, very important. Okay. So let me just answer maybe Jasmine's question first. I'm a beginner in options trading, made my first long call at a high of 370 on ANET with an expiring June 2025. Okay, so let's go into ANET. ANET was actually one of the stocks that I mentioned before in my community, and I think on Telegram as well. Okay. So okay, right. So you can see that for ANET, right? Also very nice chart. No? This stock, I love it because it's an AI winner. AI winner as in it doesn't have to be like the best AI. It supports the AI company. Arista networks, so it does the networking for the AI businesses, right? So Jasmine bought it at 370. Wow, you bought it at almost at the highest point. Right? So the last time we talked about it, I still have the line here, right? Was here, 31st May, when we first discussed it. So to me, it's along the way, it goes up, comes down, I won't do anything. But right now, I'm looking at collecting again. To collect more. Either collect call options or collect shares because of this. Can you see that? Okay. All right. So for Jasmine's case, if I'm holding on to a 370, let's say 370 call, let's 370 is where? Wow, it's really, wow, Jasmine, you are really very good at spotting. You're very good at spotting the highest point. 370 is almost the highest point. Okay. So even if I bought a call option and 370, okay, Jasmine say every time I bought will go down. Hey, Jasmine, so next time when you buy, please tell us, okay? Okay, I also like that. Actually, a lot of times when I enter my stocks, right, I enter too early. Can you see that? I entered here. Okay, maybe just make this bigger. I entered here and then later on it drops some more. Normal. So Jasmine, you're on good hands. You're in the same boat as me. Okay, but yours is a little bit too high. So guys, once again, if you're doing call options, never do it at resistance. This is what we call resistance point. Okay, if you just draw a simple trend line this type, okay, it's quite obvious that it's a resistance line. So never buy call options here. Always buy call option closer to the bottom. Okay, closer to the bottom. In fact, right now for Arista Networks, I'll consider either buying shares or even doing call options because right now the chart looks good. But of course, just past the earnings season, right? So they just had a good earnings, so we need to see whether the volatility is still high. If it's high, then give it a miss. Wait for a while. Don't worry. Okay, right. So what I'll do is, let's say if I hold on to the 370 call at this point, will I cut loss at this point in time? No, because Jasmine, you bought June 2025. Okay. June is a bit short because it's like 10 months, but I will still hold on to it. Why? Because if this one gradually increases and do this, I don't think you need June next year to make a gain. Right? You by end of the year, you will be already in profit already. Okay. So that is the power when you buy longer term call options. You can have the flexibility and the time to wait for your thesis to turn out correct. Because sometimes I can get the thesis correct, but I may not get the exact timing correct. What does it mean? That means I know that the price is going up, but I don't know how it will go up. Maybe not in this gradient. Maybe it's a longer gradient. Maybe it's like that. So that's why I always caution against people who are buying very short-term options, like 1 month, 2 months, or even 6 months, very, very short. You won't have the time for your investment thesis to play out. Okay? All right, Jasmine? Okay, great. All right. Okay, let's see. Okay, let me talk about what I want to talk about. I also I also forgot already. Okay, so right now when we look at the trade to capture, right, I would say broadly just look at Nasdaq and QQQ. Sorry, S&P first, SPY. Okay, so let's look at Nasdaq first. Right. So the trade to capture, right, the interest rate impact, right, is this. Everyone right now is looking at, hey, Jerome Powell is going to lower rates going to September. Now, I know that historically, there is a saying, historically, August, September is a weak season, right? Historically, okay. What do y'all think? Do y'all agree that usually is a weak season? What do you think? Type in the chat. Do you agree that September, August weak season, therefore need to sell? Okay, right. Let's see. Let's see. Wow, it seems like it. Last year also, like last year drop. Okay, let's go back some more. Let's go back some more. Yeah. Wow, true. The year before also. Okay. Okay. Wow, 2021 also. September. There's a dip here. Okay. All right. Okay. Then before that, before that have or not? Wow, it have. So 2020 also have. Okay, let's look at COVID. COVID actually okay, COVID sideways. Pre-COVID sideways. This 2019. Okay, 2018 let's take a look Okay, you can see the line get flatter and flatter. You know why? Because previously the stock market is a lot higher already. Okay, right. Okay, 2018 not really right. Okay, so to me is this kind of prediction is how to say it's like it is true when it's true but can you say with certainty with high probability that it will always be true? The answer is not really. Okay. In fact, if anything, right now when we look at the chart, let me just bring back the chart. Right, it does seem to me that going into August, September, right, my belief that this bounce will happen. But of course, whether the bounce will happen in this way or maybe in the slower fashion, then end up is like a sideways bounce like that, I don't know. Doesn't matter, right? To me is I don't like to make this kind of prediction. Why? Because if you think that August, September is going to drop, then what are you going to do? Are you going to sell off everything now? Right? Are you going to sell off everything now? No. Right? Are you going to bet the market will go down? You also won't do it. Right? So actually having that extra bit of information makes you what? Makes you poorer as an investor. Right? It gives you that pause to enter when there's opportunity like this. Yes, after I enter already, it might drop a little bit, then never mind, I'll enter some more. Okay? Like we have always said, we are here as investor, we are not actively trading. There's some trading element that I will show you later. We talk about the MasterCard trade later on. But the main thing, the big bulk of your portfolio, your 70%, 80% should be investment. Because this is the point where I'm going to slam traders again. No, I'm just kidding. Okay. But it's real. I have taught thousands and thousands of students, and I can tell you the majority of the crowd going to trading, right, is lose money. So if you know that the base rate is stacked against you, and if you still want to do that, that's okay. Make sure it's a manageable sum, right? So, okay, Ed is saying accumulate in September. I wouldn't say a time frame, but I would just accumulate when there's weakness, which is like now, right? I love the TA here, nice bounce. This is good. This is good, right? And this is good. So I don't want to predict too much. I just look at the chart in front of me and say, what should I do? Okay, is this something that I want to go into? That's all. All right. And especially this year is election year. Could it be like, 2018, 2019? Hard to tell, right? So I don't want to predict too much. I just want to say that, hey, if there's a good opportunity, let me just accumulate, right? So wait for retracement, accumulate. Isn't this a retracement already? Right. So guys, can you all see? Can you all see? The mindset game is very tough. Because even after the stock market retrace, people will still say, hey, maybe it will retrace some more. So the best way is what? Is to pick up your investment and say that, okay, now it retrace ready, I'm going to enter a little bit more. If it drops furthermore, I'm going to enter even more. Okay. But if you only have one bullet to fire, like property okay, then you might choose the best one. Okay. And make sure you get your loan checked out from Eaton first and be ready. Because I just tell you something. This is not related to stock market one. Recently, I was helping one of the one-on-one client to look at a property, right? And we found a landed that was selling at a damn solid price. Okay. And I think the person also contacted Eaton already, right? To do the IPA. That means loan assessment. Wow, I was so exasperated, because I told him that he needs to do the IPA like 4 months ago, and he dragged on his feet. So while he was panicking, getting Ethan to do it, and Ethan was like doing his best, basically the property was sold already, right? So guys, in a way, the stock market is a bit like the property market as well. The opportunity presents itself, you need to be ready, right? In the property world, is get your loan ready, right? That one Ethan can help you, and I will help you in the stock market to get you mentally ready. Right? Because if you don't see this chart and think that it's a retracement as an opportunity, wow, I don't know how to help you. I think even if you sign up for my stock market genius, I also cannot help you because it's a mindset issue. Okay, so this is not This is something that you need to fix, but slowly fix now. Slowly fix. Don't worry. If you cannot fix it overnight, it's fine. Okay. Let's look at the fear and greed indicator very quickly. You look at the fear and greed, right? Right now we are kind of in no man's land. Right? We are neutral. Neutral in the middle. Previously was somewhere here, 55 or something like that. Slightly greedy. So now we are neutral. In fact, when you look at the investor sentiment, wow, last week I was damn happy. Right? I was like, wow, the fear level is 30, 31. Oh my goodness. Time to go, time to go. But now it has retreated a bit already. The fear factor has dropped because the market had a good FOMC outcome, so it went down and the bullishness actually went back up again. But we are still below the all-time high, so it's not too bad. Okay, so right now I would say it's kind of like, very uncertain. Very uncertain. And I love it because when there's a bounce like this, or let's look at S&P, there's a bounce like this and people are uncertain, that's where I thrive. Right? Because when the chart is clearly showing you something and the crowd is uncertain, that means what? Good. Then the price will go up. If everybody in the whole world agree that this is a bull market already, that this green bar shoot all the way to like here, then what's the advantage? That don't have. Okay. And why the uncertainty level is a bit higher this season is because right now, if you look at earnings calendar, this is the pandemonium season. This week is like earnings palooza. Okay. Everybody is having earnings. In fact, today we're going to have some very important earnings. Okay. I think it's aftermarket. Yeah, aftermarket. Okay. So aftermarket close, we're going to see Apple. Okay, let me just zoom in. Okay, you're going to see Apple's earnings, Amazon earnings, Mercado Libre, right? One of my favorite as well, right? Coinbase is going to have earnings as well. Okay, right? So a lot of the big companies are having earnings after the trading bell today. Okay, so just take note. When there's a lot of earnings, it's going to be a bit uncertain, right? So you may not want to do options, but if there's a big dip, then you might want to think about, hey, can I go and buy shares? Okay, so I was talking about this in in Telegram and also in my community chat. I said, hey, Microsoft looks interesting. Microsoft looks interesting. So I don't know whether you remember what I did. What did I say? I also can't remember sometimes. I said that, yeah, so I will put in a low bid at 423 and sell put at 420. And right now, pre-market opening is just nice 420. Okay, so this is one of the way to use options. For those of you who are not familiar with options, if you don't understand what I'm saying, when I say sell put, then don't do it okay, right? But for those of you who understand what I'm saying when I say sell put, basically, hey, if you want to sell put, you jolly well be ready to buy the shares, and I was ready to buy the shares. I was all ready to buy Microsoft shares at 420, and I sold a 2 weeks put. Looks like I won't get my wish okay? But look at the TA here. Just look at the TA here. It looks pretty good, right? And tonight we're gonna have a, I think in 20 minutes time, market open before 20 already. Okay, right, okay. And let me just quickly give you all update on what happened for the MA trade, MasterCard trade that I publicly put on my channel. Those of you in Stock Market Genius, you already know what I did with the MasterCard trade already. Okay, so previously for the MasterCard trade, what I did was I did a what we call a synthetic. Okay, so once again, those of you who don't know, don't follow. Go and learn. If you don't know where to learn, just go and sign up for my Stock Market Genius course, then go and learn first. Okay, I have all the recording videos there already. For those of you who know, synthetic is very simple. You are selling a put option and taking the premium to buy a call option. So this is perhaps one of the only time I will do a short-term buying of call option because I'm not paying what. Okay, I'm using the premium for the sell put to do it. Okay, so what I did was, let me just quickly recap. I did a 450 sell put. Okay, and I also did a 450 buy call around here. All right, 450. So previously when I did it, the price keep fluctuating. Wow, then it was negative all the way. But I saw that it's coming up, all right. This is the time when a lot of people keep asking me, hey Pete, should we close the synthetic? Still losing money but not losing a lot. Let's just close okay. So guys, even when you enter a synthetic, right, what you're doing is you're selling a put to do a buy call. So essentially, what is your downside? Everybody, when you sell a put, what is your downside? What is your max downside when you sell a put? Let's say I sell put at 450. What is my maximum downside? Will I lose money in my buy call? Not really, because the premium came from the sell put, right? The sell put premium, I put it into the buy call. The only downside I have is like what Naresh said, assignment. I will be asked to buy MasterCard shares at $450, 100 shares. That's my max downside. Okay, and I was 100% prepared to accumulate the shares. So that gave me the ability, as an investor and also as a trader. Okay, I love this when I learned from one of my mentor, right? If you're a good investor, it will make you a better trader because you have the natural downside protection. So I was telling myself, even if the trade don't work out, so be it. I will just buy Microsoft shares. MasterCard shares at 450. All right. So that's the idea. That's why I was willing to hold until yesterday. The expiry date is tomorrow, 2nd of August, right? Expiry date is always Friday, right? Yesterday, we saw that MasterCard had a big jump. Why? Because I know that earnings also coming. Okay, right? So, guys, if you are doing synthetic or even just selling puts, okay, one trick that I would suggest to you is try to set the expiry date after the earnings. That means if you know that the earnings is going to be around here, okay, right? The earnings is going to be here. So the earnings was 31st July, right? If you can, sell to an expiration date that is after. Okay? After the expiry date, not before the expiry date. Because there will be no maximum share price movement after. Sorry, before. There's nothing changed, nothing changed. But after, when there's a good news, right? Especially potentially we're gonna get good news after a very beaten down stock. That's where you can make good profits like this. Okay? All right. So this is the main thing that I want all of you to remember, is that you don't have to trade the market all the time. Don't do that, right? You trade when it's necessary, okay? So let me just share the screen share because I think it's in my Telegram. Let me just show you. Okay, right? So I put down here, this is part of the MasterCard, right? So I close the position, I buy back the put option, okay? Wait, can you all see? Let me just make sure that you all can see. Cannot, right? You are seeing half only, I realize. Okay, give me a second. Give me a second. Okay. Let me see if this is better. Okay, this will be better. All right. Okay. So, wait, you only see half. Why? So funny. When I bring it up, can you all see? Can, right? Let me see. How do I do this? Yeah. Okay. Never mind. I don't know how to do this. Oh dear. Maybe I put it in the middle. Is it because I need to put it in the middle? Okay, great. Okay, now you can see. Okay, so this was the sell put, 450 sell put. This is the 450 buy call, right? So what I did was I bought back the sell put and I sold away the buy call. Okay. So guys, can y'all put in the chat, right? Can y'all put in the chat? Which one actually make the most money? Which one actually makes the most money in this position? Is it the call option or is it the sell put that makes the most money? Okay, that means y'all don't know how to read IBK. Okay, so y'all look on top. Can you see that there is a green number here, the plus 1.1? Can you see this? Okay, so this is actually the profit I make. So actually, the sell put make the most money. Okay. The sell put actually make the most money. The buy call also made, but it actually only makes $628, $626 per call option. The majority of the returns come from me selling the put option. Now, why is the case? Why is that the case? Because right now, volatility in the market is pretty high. Remember just now the uncertainty level is very, very high, right? The whole market is basically undecided whether it's going to be bearish or bullish, That's the best. Because when the whole market is in agreement, then you cannot get good premium. Okay, so that's why I love synthetic, because even when my buy call don't really make a lot of money, right? My sell put can also save the position. And end up every call option you get about 1,600 plus. Okay, so that's something I really like. And one of you DM me, which I'm very happy. So guys, if you all have results, do send it to me. Okay, my Telegram handle is @PeteTan. Okay, so you can send it to me. All right. I tell you the motive, very outright. I want you to send it to me so that I can show others that, hey, this is actually possible. Right. So this community member, I won't name names. He did 6 position. So in total, he makes $6,000. Okay. Not bad, not bad for 1 month trade. Okay. Not bad for 1 month trade. And this one, honestly, to me, the most powerful part is not the trading part. It's the fact that even if I got the trading wrong, I could have been okay. That's the beauty. Okay. So ultimately, what happened to MasterCard is when the earnings came out, the price just jumped. And then yesterday, basically, I sent out to everybody and say, okay, time to close. Right? Time to close. Right? So yes, today actually went up even further to 464. But guys, don't be greedy. Okay? Don't be greedy. If you overstay the party, that's where you'll get into trouble. Right? Don't overstay the party. Okay, Cam, let me see. Got any questions? Okay, iPhone 3 say yes, but the challenge is having the need to buy the capital when to buy the stocks. Yes, agree. Right. So you will need a larger capital if you want to do this position. But let's say if you really want to just want to trade it, actually the capital you need is 20% of the sell put. I don't encourage you to do it that way. I will always encourage people to have sufficient funds to get assignment if needed. Okay, right? So if you can't do on MasterCard, do it on other stocks. There's so many other stocks. There's also 2-digit stocks everywhere. Okay, but generally, this is once again what I always say to my students is that the larger portfolio guys, you have a strong advantage. Right? A lot of times people say, wow, Pete, if I throw in 200K, 300K, like very dangerous. I put in so much money to invest. What if I lose it? But to me, is if you invest with 200-300K, actually you are safer. You are able to invest in good companies like MasterCard, right? Visa, your Berkshire Hathaway, or like those that I mentioned in my stock market genius. Okay, like ANET as well. ANET is not a cheap stock also, right? 300 plus per share, but you can do it if you have a 200-300K portfolio, no problem. Okay, all right, come. Okay, Jen is asking, can I take a look at Race? Okay, Race. I also like this company. Race is Ferrari. Right. So Ferrari, pre-market, boom, 432. What happened? Earnings is today, man. Wait, let me check. Oh, yeah. Earnings is today. Oh, so I think the guidance probably went up lah. Let's see. Let's see. Let's say if there is a reason why it went up. There, see? I knew it. It's definitely guidance. Okay. So guys, the thing is this, although Ferrari only make like, I think 2,000-3,000 cars a year, compared to Toyota, like make 200-300 million cars a year. But I will buy Ferrari over Toyota. You know why? Because when economic crisis happen, right, people will not buy cars like Toyota because they are practical people. But people who buy Ferrari, they are not practical people. They are rich to the tilt people, right? So it doesn't affect them one. Okay. The unfortunate truth, I don't know whether some of you all will agree with me or you think that P is being very cocky again, is that recession hits people differently. Recession hit people differently. To the ultra rich, recession to them is nothing but opportunity. Yeah. Right. So to the rest of us, maybe it's like, wow, recession very, very, very tiring, very, very bad. But to them, it's opportunity. Right? They will make more money, they will buy more Ferrari. Okay. Okay. So this is a great business. I love it. Yeah, but now it has bounced already. So don't chase. I won't chase on. Okay. I previously also bought during the support here. So this one very clear. You can see the support with your naked eye on. No need a genius like me to tell you, right? Okay. Right. So now that it's at 432, actually it's closer to a resistance. Will I buy? The answer is no. I wouldn't look at it really. Okay. All right. So these are the main things that everybody needs to be aware of so that you know what to do and when the market drop. Okay. Let me look at something else to show you. Okay. So maybe stay along the car industry. one company, I think some of you know that I love this company a lot. This company known as Copart. Okay, so this company is basically they sell you tires, they sell you, your door, your mirror, and all these. Okay, fundamentally very strong company, but now the support is here: 200 EMA, MACD, stochastic, RSI. Okay, once again, please don't copy blindly. This is not investment advice. I'm just giving you ideas to think about. Okay, all right. If you copy this, you make a loss. Whose fault is it? if you copy this, you make a loss. Whose fault is it? Become my fault. No. Okay. No, okay. It's always your responsibility. But if you buy this, you make money. Also your credits to you. Okay? Also credits to you. Okay. Any question? Joyce is saying, so tech stocks can buy, right? I won't answer that. Okay. Hey, to me, is this these days, the news keeps still saying tech stock, tech stock. Hey, to me, is there any company out there that is not a tech stock? Every company is a tech company. Even like Copart that I buy, or even Ferrari that I buy, are they tech companies? They are. They are very high tech companies. You will not know you will not believe the type of technology that goes behind Ferrari. And you know how they test technology? They raced it. They raced it in F1 to get the Ferrari technology. So are they tech companies as well? Technically, they are. So I don't think, to me, technology as a category makes sense, right? So I wouldn't say tech can buy or whatever. I would just say that buy into companies that you have confidence. Okay, buy into company that you have confidence. One potential, okay, yeah, I want to talk about interest rate play, right? One of the potential interest rate play is actually your long-term interest rate, like for example, TLT. Okay, so this is 20-year treasury bonds, right? This thing has been on a multi-year decline. Okay, on a multi-year decline. It's been dropping since when? Let me see. Since COVID. Okay, it's been a multi-year decline because interest rate has been dropping and has been increasing and increasing and increasing. So when interest rate goes up, bond prices go down. But what we see right now is that there seems to be a slight reversal. Okay, there seems to be a slight reversal. First time we are seeing higher highs and higher lows. Can you see that? Higher highs. This is the last high. This is the next high. Higher lows as well. Okay, so we are starting to see a slight uptrend in this case, right? So this is your 20-year treasury bonds. Okay. Now this one I wouldn't really buy it as an investment. I'll just hold it until it goes up a bit more. But historically, has it gone up to a certain point that you can take a look as reference? Is that I wouldn't think it will go up to COVID level, to be very honest. Okay, because we will not cut rate to zero again. Already. This one, Ethan can verify lah. Ethan, I don't think we'll cut rate to zero, right? Correct.
No, I don't think so.
Okay.
Zero was a $1 trillion triage. It was everybody, guys, here's some money, please
Yeah.
don't die.
Yeah. So just now, based on what Ethan showed, I think the long-term rate is around two plus, right? Something like that. Okay.
2.8.
Yeah, 2.8. So if this is zero and now here is 5, 2.8 is somewhere in the middle. Okay. So I think it's gonna be somewhere around here. 130, 140. So now it's 95, right? You can buy and then see if it goes up to there. Right. So to me, that is a potential long-term treasury. This is the TLT ETF. Another one that I personally use is the what is it called? ED.
Hey, Pete,
Yeah.
on this,
Mm.
according to my textbook, it looks like a bullish ascending triangle in a downtrend. Does that
Oh.
is that correct or not?
Eh, kind of. Kind
Mm,
of. Yeah. So okay, so what Ethan is saying is technical charts. Okay, so
mm,
this is downtrend, but he's saying that the bullish ascending basically he's talking about this one.
ah,
Yeah. Right. So this is what we call ascending triangle.
mm,
Yeah. Correct. Not wrong. Technically, this is what we are seeing right now. This is the
mm,
other long-term bonds. They have 20-year bonds. They have 30-year bonds. So this is even more long-term than TLT. Right. So this is the
mm.
Vanguard long-term bond ETF.
Cool.
Right. So these are the ones that I look at in terms of bonds. Okay. Right. So, but to me, the longer-term investment is still gonna be your standard good companies. Right. Those of you who want to know what are my favorite good companies, you can join Stock Market Genius. Right. But if you just look at QQQ, to me, these are still pretty good trends. Right. Okay. In fact, if anything, once again, just I reiterate, we are barely out of the last recession only. Barely, right? We had such a big dip, just come out only, you know. So if you take this as the previous mark, now we are only 17% from the last high. 17, eh. You think a recovery will start to collapse at 17%? I don't think so. But will there be retracement along the way? Yes. Okay, for sure there will be retracement along the way. All right. So yeah, something to consider. Right now, I think the talk of the town is basically IWM, which is Russell 2000. This is your mid to small cap ETF, right? So yeah, it actually has gone up quite a fair bit. Yeah. In fact, this is perhaps one of the best performer in the last couple of weeks. So this one, I would say if you want to invest in Russell, you need to have a very strong stomach. You need to have a very strong stomach. You look at this company, not company, this ETF, just looking at the last, maybe, no, you look so far back, just look at the since COVID times, right? You can see the volatility is so much more already, right? The volatility is actually quite severe, okay? And if you stack QQQ on top of it, right, you will realize that actually, if you don't want to live with that much volatility, you might as well buy QQQ. Because actually the dip is similar, no? But you get more gains. Okay, the QQ gain is so high that it's out of the chart already. Okay, right? So if you start from COVID 2019, right, until today, your IWM did 75%, QQ did 200%. Right? So it's up to you if you want to diversify. I personally don't buy into IWM because I don't think I'm an expert in small caps. I don't know what are the small caps to buy, but people just say, hey, buy the whole ETF. Or then to me, if I don't understand what is inside, I still want to buy the ETF. So it's like you don't know the component and you still want to buy the, like, you don't know the ingredient of a dish. Let's say you're cooking, you don't know the ingredient of a dish and you still want to buy the dish and eat it. Wow, your risk very high. Your risk is very high. Whereas if you buy into QQ, SPY, at least you know that, hey, the component, the ingredients are solid companies. Right? So that's my take on IWM. But no doubt, for those of you who entered in the early part of 2024, you will make a bucket. Right? Let me see how much it gone up. Right? So early 2024 is somewhere here. Wow, 25%, not bad. Okay, pretty good. All right, so these are the small cap ones. I would say if you want to use it as a diversification method to balance your portfolio, good. Okay, but that's not something I do. Okay. Okay. Meanwhile, still got a bit of time, just a bit more. Let me take out my book. Okay. Hey, so guys, this is something that I encourage everybody to do. Have a paper and pen system if you can. Right? And write down any of the stock that you're looking at it and say, hey, pretty good, you know, and so that every day you just look at your booklet, right? Okay, look at your booklet, and you will develop this habit of making sure that you watch over your portfolio, right? Even when you buy and hold, guys, it's called buy and hold, not buy and forget. Right? Okay, one thing I recently was looking at is of course, my energy trade. For XLE, very, very nice support. Right? I still like it. The uptrend is still good. In fact, I love it when Donald Trump comes back. Trump is very pro fossil fuel. Right? Biden is not, but Trump is. Okay? Trump is very pro fossil fuel, but Biden is not. Okay? But having said that, I have no absolute love for energy. Right? To me, is when this one reach a maturity, I will definitely sell it. So to me, XLE is not an investment, it's more of a trade. Okay? So this is something that I want to share with you. Let me see. Any questions? Hey, Ethan, you got anything you want to share? Can share also. Okay, Naresh asked, do
Okay.
you ever sell your buy and hold when they are overvalued? Okay, maybe I'll answer this later. Okay, either you got anything you want to share?
Not yet. Anything? Anybody want me to share?
Okay, anybody has any questions
Mm.
for Ethan, do put in the comments. Okay, so
Mm.
Naresh's question is basically saying, Pete, when do you sell your stock? Right? I think that's a legit question. When should I sell my stock? To me, is this, if it's a great business, usually my past track record is that when I got a bit spooked by small things, and I sell, right? Well, I regret it later on. I regret it to no end, right? So generally, if it's a strong company, my threshold to hold on to it is very, very high. Unless it is very, very, very overvalued, right? Do note that I use the word very 3 times. That means even if it's slightly overvalued, I won't sell. Right? Because a good company to me should command a premium. It should not be damn cheap. Unless it's a very unknown company, right? But if it's a fairly known company, a good business should command a premium. It's just like a property, right? If you own a good property, your good property should sell a good price, right? It shouldn't be selling at a cheap. Because if everybody knows the property, then there's no reason that it will be priced low. Okay?
I got a direct message question from Jen.
Okay.
Right? So she says, is it better to rent or buy a property and put the cash into stocks and investments?
Oh.
Interesting question.
Interesting. What's your view?
I think if don't have property, buy property first. If going to grow the portfolio a lot faster, then depends if you are really going to grow it that much faster, then okay, the rental route makes sense. But if you don't fully know what you're doing, then the opportunity cost savings is not worth the trade-off, especially when you're looking into such a nice asset class such as
Yep.
Singapore property where the demand is much higher than the supply. We can know from the additional buyer stamp duty, they raised it to a ridiculous number, 60%. If it goes up higher, it will just become a joke, I think. At this point of time, yeah, so do know what is your competency, and also it is nice to barbell lah. What do you think?
Yeah, totally. I was gonna say that my style is to barbell. So I will have both. I will have a property and I will have my stock market, because during the last time when the market started to come down in 2022, right? My overall portfolio did go down, but my property just keep going up. My stock portfolio went down, but my property keeps going up. So it helps to balance my psychology a little bit, right? And another thing is this: when it comes to choosing between stock market and property, I would say there's no absolute right answer, because it really depends on you as an investor, right? For example, if an investor is very calm and very steady, very emotionless, then I would say maybe you will do better in the stock market world. Because traditionally, in the long run, yes, stock market does statistically, on paper, give you a better return, right? But property has its strength. Why? Because while on paper, it looks like the stock market outbids property, right? But in the long term, when I look at my client's portfolio, I talk to them, I consult them on property one-on-one, right? What I realized is that most of the investors in the stock market do not do better than the property that they hold. They are probably better off just buying the property, right? What's the main reason? Why isn't the theory realizing itself in reality? The very simple reason is the investor behavior. Because in the stock market, when things happen, you panic, you will sell, so you likely to sell at the wrong price, right? That's why my objective here is to really help people to manage the emotions and give you all some guidance along the way, right? But when you buy property, the good thing is this: when I deal with my one-on-one clients, I always tell them, my job is to help you to look at what is the good property to buy. But after I've done that and when you buy already, right? There's no need for me to guide you already. There's nothing I need to do already. Okay. Right? There's nothing you need to do as well. You can just go and sleep, sit on your butt, just go and do whatever you like, maybe it's your work, your hobby, and the property will just grow for you. So in terms of the demand, psychological demand of a property investor compared to a stock market investor, a property investor psychological demand is way lesser. And that's why more people do better in property.
Correct. And I always tell my clients,
Yeah.
paying your mortgage is the most boring way to become a millionaire.
Exactly.
Mm,
Exactly. Okay.
mm,
So I don't have a outright answer for Jen, but the key
mm,
thing is you must see what you want, and ultimately I think there's room for both.
correct.
Right? Ultimately, there's room for both. So do make sure that if you want to get your property right, you can also sign on for my one-on-one consultation. I can assist you on that. Okay, but we only have 15 slots a month, right? And then if you have loan issues, just get Ethan to sort it out for you. For those of you who are already on my one-on-one for your AIP, your loan assessment, please quickly go and message Ethan. Okay, Ethan's team will be there to assist you. I don't want another case where I find a damn solid property for you already. You cannot take action, then you miss the opportunity. Oh, I feel very sad.
Right.
Okay.
So I talk a little bit about my AIP over here. Okay, so in terms of AIP, I'm actually able to generate it out ASAP. In fact, if you believe in my numbers and you believe in the math, which at this point of time, since we are in a closed room, I believe, don't tell this to the public, but I have not failed one AIP. Choi, taika lai si. Let's just keep
Hey, I
it
want to put
there.
this on YouTube one.
Okay. 99% certainty, all
Yeah,
right?
99%
Sometimes there is
yes.
still boo-boo cases.
Yeah.
But at this point of time, right, usually what I do for my clients is a complete breakdown on how much they are able to, number one, afford, what is their budget, including after they minus away their CPF, how much cash they actually need. I tell them about things like how much your down payment is in terms of cash, how much your mortgage is going to be, and how much the property tax. Everything is all counted
Yep.
in.
Yep.
So it depends. Sometimes it depends on a lot of factors, and it's good to be in touch with me and my team lah. It costs nothing,
Yeah.
and we are able to get you the best rates out of
Correct.
10 banks.
Correct.
Mm.
And one thing I really appreciate for Ethan, right, is that he always help my client to kind of dress up their profile a bit lah. You know, like sometimes you all take loan at time, you never prepare your credit, you never prepare your scoring and everything. You just go and take loan, right? You'll get very low loan on, right? So he will tell you like, okay, what can you do with your credit cards and stuff like that. Okay? All right. So make sure that you get all this ready. Ethan's team will advise you what you can do lah.
Before
Okay?
take picture, put some makeup, right?
I wouldn't go into details. When
Mm.
Ethan get to his mortgage consultation with you, then
Mm.
you will find out more. Okay, all right. So I put a link for Ethan's application over there. It's
Thank
100%
you.
complimentary lah. Okay. Wow, a few questions over here. Maybe I address property one, then I'll go into the stock one. Okay. Irene is asking, Pete, Ethan, do you both consult on overseas property? Overseas, I would say I'm only familiar with certain segments like Australia, Japan. I'm very familiar with Japan right now.
Mm.
I basically went there almost every month for 6 months to find out lah. So I'm quite familiar with Japan. UK I'm quite familiar as well lah. But other than that, if you buy into like Timbuktu or whatever, then I don't know. To me, is if you have a lot of overseas property and you can actually sell some of them to enhance your local one, yeah, that's something that I can advise you further in the one-on-one consult for property. Okay. All right. Let's see. Any other questions?
God,
Raymond say
I
he
can't help
can't
with
help with reprice.
reprice.
Yeah, repricing you can do yourself, but actually this thing we mentioned before, the
Correct.
comparison between reprice and refinancing, right?
Correct.
So guys, y'all type in the chat, what do you think? Usually repricing better or refinancing better? Usually repricing better or refinancing better. Okay, right? So
Yeah.
the logic goes, new money is always better.
Mm.
Okay, so to the bankers, you must think from their angle. Okay, you cannot just look from a third party's angle. You must think from their angle. The bankers will only make money when they get new funds coming into the bank. So when you are repricing, are you new funds? You answer that yourself. Okay?
Mm.
When you are repricing, are you new funds? Okay? But when you are refinancing, that means you are going from one bank to the other. Are you new funds? So if you are a banker, let me ask you, will you treat the repricing guys and the refinancing guys? Who will you treat better? Who will you want to attract more? Are you incentivized to attract repricing or refinancing? Okay, so this one we cannot talk about it very outright lah. You just need to talk to Ethan and he will show you some of the numbers, and I can tell you sometimes repricing and refinancing even got different interest rate.
Correct. I share a little bit here. Give me
Yeah, come.
opportunity. Okay, so repricing, right? Sometimes it depends. Some banks can be nice, some banks can be nasty, and even if you are in the nice bank, you kena the nasty banker, then you kena nasty rates. So there's
Oh
a
my
lot of
God.
variables in between, and I've seen people, right, that reprice within the same bank. Some people get offered 3.75, some people get offered 2.9. It can be the same exact bank, and sometimes the offer is very different.
Yeah.
However, when my clients reach out to me, right, especially for repricing, personally, I am a very big fan of repricing because I'm a very big fan of helping people save money. Okay, so if you look at my slides over here, this is what I normally advise my clients. Usually, there is a step involved, there is a my Zoom crash?
No, the sharing is just not happening.
Okay,
Oh, okay, come on, yeah.
cool. Okay. So able to see?
Michael say UOB jialat.
You will be
Okay.
hey.
we won't go into specific banks. Okay, okay.
Okay.
Hey, y'all don't get us into trouble.
Oh, what happened?
Where's Ethan? What happened? Hey, Ethan, I think you want to share something that's sensitive, so the bank is stopping you, okay?
I think so. I think so. Got government attacking my computer. I'm kidding. Okay, so are you guys able to see this?
Yeah, yeah.
Okay, so when you're repricing, right, it depends on which stage you are at. Like if you're in BUC, your repricing is going to be the first thing that I recommend. If you're looking at a resale, maybe you might want to refinance first to extend your loan tenure. But once again, a lot of this, right, depends on when you want to exit, which is why in our company we have things, our proven framework such as strategy, structure, and rate to make sure everything is sweet and you don't waste money to number one, choosing the wrong rates, number two, not structuring properly and denying the penalty. So at this point of time, we're here to help, even when it's repricing, right? In fact, if you look at my Google reviews, a lot of them are from repricing. The reason why is because, right, when I tell them to reprice, sometimes people also uncertain in what interest rates to choose because the fixed rate and the floating rate, sometimes they're not quite sure whether which one is better. And the difference is tens of thousands of dollars. And not everybody joined this class. And because of that, I'm able to help them either number one, telling them whether their repricing rates are decent, the bank not taking advantage of them, uh, or if their rates are bad, right? Then I will be able to show them how much interest will they be saving and whether they want to consider a refinance. But once again, this is portfolio specific, is person specific, it is plan specific. So yeah, just reach out and me and my team will be able to help you. Person with me, very, very strong. Has done this for very, very long and one of the better people to consult in terms of your property journey also.
Okay. All right. So y'all can reach out to Ethan if y'all need him to take a look at your mortgage. Okay. All right. Okay. So there are a lot of questions. Oh, Raymond say Ethan is extremely efficient. Okay, nice. Okay. All right. Okay. So I think Mao has question for Ethan.
I have
Would you
equity.
advise? Okay, I think the advising to go repricing or refinancing, do reach out to Ethan and Ethan will share with you what would be the best way to do it. Yeah, because not everybody have that scenario lah. Huh? Okay.
Absolutely.
Okay. Fantastic. Wow, Ethan, you got a lot of good reviews. Kim say
Thank
agree.
you.
Okay.
Thank
All
you
right.
all. Thank
So
you. Thank you.
yeah. So keep it coming. Keep it coming. Let's go into back to the stock market. Okay, so guys, this session very dynamic one. So every time we talk about interest rate, right? I would say property and stock market tied to the hip. Right? Cannot let go on. Okay. So let's look at some question. Hey guys, if I have questions that I missed, do help me to repost them. Okay. So just now there was a question about this company. I think Ethan also looked at it very closely.
Which
Is
one? I
Lululemon.
tell you, I
Okay,
spent so
okay.
much money on my wife's tax, man.
Yeah, I
Wow.
also, man.
Oh
I
my
spent
goodness.
so much money on this company. I feel I need to earn it back.
Yeah, I told my wife lah. Every type you buy, I need to at least buy 2 shares.
Okay. All right. Hey, so ladies in the house, do you all agree or do you all feel that Lululemon has like one of the best in the class yoga attire? If you do, type in yes, okay? All right, if you do, type in yes. My wife like swear by Lululemon, and she has tried like other brands, right? So she said, yeah, Lululemon is still one of the most comfortable one. Okay, so before I go to the charts, let's look at Lululemon in terms of financials first. I think that is crucial because if you don't look at financials, then you are basically going into the blind, like you're just trading.
Right.
Okay. Right. So if you look at financials, this is a company that, the operating income is increasing, right? And it's all at like a good double digit, like 27%, 24%. Okay. Right. So they are not shabby, like 1-2% increase, that kind of stuff. Okay. If you look at balance sheet, okay, this is a company with not too much debt, right? If you look at, for example, ratios, so you can see over here, total debt to equity is only 33%. That means they are still very under leveraged. They are not borrowing to the tilt yet. right? In fact, this is quite a cash-rich company. How can we tell? You look at current ratios, right? Current ratios is basically your current asset over current liability, and they are at 2.7 times. That means you have 2.5 times, 2.7 times more in current asset, which is usually cash lah. Current asset is usually cash, okay, right? So yeah, fantastic company, very efficient company, as almost as efficient as Eaton lah. Okay, return on asset, return on capital, return on equity, wow, very, very strong company. Cash flow, this company has cash flow that many companies will dream of. You look at how fast the cash flow has grown, In 2020, it was like 600 million only. By this year, trailing 12 months, the cash flow has grown 4 times. 4. 2020 to today is only 4 years. That means every year jump 100%. Wow. Okay. But if you look at the chart, wow, this look like a monster nightmare chart. Boom. Okay. But as it is coming down, what I like to see is that it is setting up very, very nicely. The stochastic is getting ready, right? The RSI is finally ready. The last time we saw the RSI so low is here. Okay, let me add another indicator. So one indicator that I really like is the William R. Okay, so William percentage range, you can put it in, and you can see William R is also ready to bounce already. So I love this company. Okay, I'm just buying a bit slowly because I'm waiting for the clearer sense of a bounce. Yeah, right. So I'm just waiting for that. Okay. I think another business that someone asked was Hershey. Hershey also, right now to me, is like a coiled spring. After a massive dip, you know why drop or not? You know why drop? Because of this person called Mr. Beast. Okay, so Mr. Beast created his chocolate, right? So a lot of people think that, wow, Mr. Beast is going to have a big impact on Hershey's. Then plus after that, there's this drug called Ozempic. You heard of Ozempic before or not? That means the drug will make you slim down. Anybody taking Ozempic, okay? Right? So they thought that, wow, people won't eat chocolate already, right? No, you know what? If I'm taking Ozempic, by right, it should reduce my appetite for sugary stuff. Okay? But what it would also mean is, once I get off the drug, what will happen? Those of you who had slimming drugs before, okay? I don't know whether you all had before. I never had before, but I know of friends who had tried slimming drugs before. The moment they get off the drug, right, they go ravenous. They are like lions out of the cage. Okay? So to me, sugar is not a good thing. Sugar, to be honest, is something that is not good for your health, right? It makes you fat and everything. But we cannot deny that it is one of the things that people crave, right? So right now, I would say Hershey support is very nice. I love it. The MACD trend is very, very good. I love it. RSI is uptrend, right? So yeah, fantastic overall. Okay. Edway is asking, what are your views on Lululemon losing their product officer? I would say no biggie lah. The biggest threat last time Lulu had was they lost their founder. To me, that was the biggest threat. Nowadays, chief C-suites are product officer, CEO, CFO, COO, the C whatever O lah, CXO. They change quite often, so I don't really think too much about it. Okay. Naresh saying today Nasdaq Composite gained more than Nasdaq 100. Okay, let's see. Okay, this is Nasdaq 100. So we went up by 1.8%. Then Nasdaq Composite is Composite, the index is called what? Currently I cannot remember. IX, okay. My friend, about the same. Okay, no need to look for small differences. Okay. Okay, but the good news is, hey, we are seeing a nice bounce here. If you just go back here, dun, 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 yeah, very nice trend. Okay. Jasmine asks, what's your opinion of TXRH? Wow, what is TXRH? My goodness. Okay, so maybe another few more minutes are going to be 10 o'clock already. So I'll end off at 10, okay? TXRH. Oh, Texas Roadhouse. I've eaten there before, but I don't know this company very well. Okay, so let's take a look. Let's use this as a learning teaching lesson. Okay, let's go take a look at it. Okay. One person DM me, Pete, how to join your one-on-one property? Oh yeah. Okay, those of you who want to join a one-on-one property, I just send the link in the chat very quickly. Those of you who want can go and sign up using this link. Okay? Right? But I think I'm almost full. So those of you who want, just submit quickly. Okay, come back here. We are at Texas Roadhouse. Let's just look at example. Net income, not bad. Increasing quite nicely. right? Cash flow, quite good. Let's look at further down. Operating is good. How's the margins like? Let me see. Okay, not too bad. Not too bad. Let's look at, okay, not actually not bad. The efficient for restaurant to get 30%, 10% is not too bad. Gross margin 70%, typical for restaurant. Net income 7. Current ratio is a bit low, but that's normal for restaurant also. That would be higher. I would say it's a okay, okay investment. I wouldn't say it's like a company that I would say, wow, like this is a damn well-run company. No lah. Okay, right? But let's take a look at the charts. Okay, so this is what I usually do when someone asks me, hey, how about this company? I'll just do a very quick 2 minute just to know whether this company is like decent or not. So I always have 3 baskets. Good, decent, suck. So this one fall under decent. It's okay, it's doing well, it's growing quite well. Okay, so let's take a look. Wow, the chart has been quite solid. Okay, so maybe we do a 1 year chart first, very quickly. 1 year chart, pretty good. Yeah, pretty solid. Let's see. But now it's a bit on the higher side. Can you see? If I just drag this out, okay, if I just drag this out, can you see there is more at the resistance? So I'll just wait a bit, right? It could be breaking out. Who knows? Okay, so I'm just thinking about technicals here already. I'm not talking about fundamentals here. Technicals is if I think this is a breakout, what I want to do is I want to wait for a revisit to the bounce. Then I will trade the breakout. Then it will like that. Okay, but if it comes out here, it doesn't bounce, it just goes straight back in, then hey, that will be a failure, trade failure. Okay, so for those of you who are in stock market genius, I always say when we trade, okay, my upside, when do I take profit? I will take profit at the next resistance. But downside protection, I always keep it at 8%. That means if I'm wrong about the trade goes down by 8% from where I enter, I'm out. Right? Trade, you must be very disciplined. Don't overstay the trade. You overstay the trade, you turn it up into a long-term investment, you are in trouble. Okay? You will be in a lot of trouble. Yes. Yeah.
Raymond has a question. How to sign up to Stock Market Genius?
Wow. Let me go and find the link. I actually don't have the link ready. Wow, y'all can see I'm a damn poor salesperson. My team will kill me. My team was like, hey, people ask you for the link. Okay, wait. Okay, lucky the SMG teams are not here. Okay. Okay, I'll send the link in the chat. Let me see. Okay, here. Oh, they just created a Rebrandly link for me. Okay, very good. Okay. Okay, so Stock Market Genius link is here. Rebrand.ly. Okay, maybe I put it here, then you all can see. Okay, so if you go to this link, you will see this lah. This is the page. So it tells you that what this is for. So mainly what I do here is I'm trying to teach stock market investing, options, okay? And what we do is I have this tracker where I'll show you the exact trades that I do, okay? And once a month, I want to do monthly live stream on top of what this is. This is for public. I want to do one that's just for SMG if you want to ask more in-depth question, right? And I also want to help you all in terms of research because I do research on a daily basis on stocks, right? I would say sometimes people tell you, hey, wow, 1 month I give you like 4 stock idea, 5 stock idea. Wait, to me, those are rubbish. If you can find a good stock idea, maybe every 2-3 months, is very good already. Okay, it's very good. But every month, what I'll do is I'll just send out my research report, okay, to the community, and y'all can have a look at, okay, what is this business? Why does it interest me? Okay, and y'all can, tap on the idea and research deeper if you like. For example, the latest one was Cintas, right? When I say the name, most people don't know what the heck Cintas is at all. They'll be like, huh? What is that? So you can go and take a look at the company and decide, hey, if this company, based on what Pete say, do I agree with it? If you agree with it, you want to invest in it, that's credit to you. But what I want to do here is I want to help you all to save time and save energy because I know not everybody here has a full-time job like me on investing, right? So I want to elevate the community. So I want to show you what I do investment-wise, right? I want to give you ways to ask me questions and also share with you my top ideas for that month. Okay, usually 1 month, at most, I think I'll have 1 or maybe 2 ideas. That's it. Okay, so I don't want to give you all false promises. Wow, every month give you 4-5 ideas. If I every month give you 4-5 ideas, those are shitty ideas also. Okay. Okay. Ed is asking, is it in SGD or USD? It's in USD. because I know I have quite a big community outside of Singapore also. So I just want to have a common currency lah. Until the day USD is not the reserve currency. Okay, until the day maybe it's like Zimbabwean dollar, then maybe I'll switch to Zimbabwean dollar. Okay. Okay,
Ooh,
so
let's
you,
unpack that.
yeah. I don't think so lah. Honestly, I think still a long way for US dollar
Long way.
to lose the reserve status. Still a long,
Long way.
long way. Yeah.
What's the DXY doing?
Yeah. What sorry, what? Oh, DXY, let me see. DXY.
Oh, 104 still
I
okay.
think it's weakening. Yeah. So US dollar has been weakening a little bit. Yeah.
Mm.
Vincent say I need to hire an assistant. I agree. Actually, I have. I hired an assistant, a virtual assistant. I have a virtual assistant. Okay. Where was I? Okay. Look at so we talked about Texas Roadhouse already. Okay. Let's see. Any other questions before we go? 2 more minutes. Let's see. Okay. Kelvin DM me. Hey guys, don't DM me. Just put the message in the overall chat. We are all friends here. So you put the question in the main chat, then everybody can learn together. Okay. In general, for sell put, when do I choose to close? Very good question. Okay. So what Kelvin is asking is basically when you sell a put, right? Okay, I'm just going to start drawing. When you sell a put, let's say you sell for, I don't know, let's say $10. Okay. As time passes, this number will start to drop. Okay. It will start to, okay, drop. Right? Because of two things. One is time decay, and also as the share price goes up, the intrinsic value of sell put is disappearing. All right. Hey guys, if at this point you are lost already, right, that means you don't understand what option is. Then those of you who don't understand what option is, go and sign up for Stock Market Genius Camp. Okay, I explained in detail what exactly it means in the course, right? So that I don't have to keep repeating in the live stream, then I can talk about more advanced stuff. Okay, so your premium will start to drop. Let's say it dropped to a point where it's like, $2. The question is, at what price will I sell? Oh, sorry, not sell. What price will I close off the position? Right? So to me, is this. It is not a fixed number. I know some of y'all look for fixed number, but unfortunately, it's not a fixed number. Why? Because it depends. For example, if let's say the time period here is 1 month, and the 1 month left with 1 week, okay, and I'm already at 70% gain rate. That means I only have 30% more to gain in a 1 week decay. All right. So over here, I already make 70% for 3 weeks. I have 30% more for 1 week. Then to me, I will hold a bit longer. Because 3 weeks for 70%, that means 1 week is actually less than 30%, So if I can gain that 30% in the last week, I will take it. Okay, so this is my formula for calculating. All right. But if you want a rule of thumb kind of thing, okay, rule of thumb, is this. If I am 1 week left or less, and I only have about 20% value, that means I'm already 80% in the profit, I will take it. Okay, the rule of thumb is if I'm already 80% in the profit and I have 1 week or less left, I will take it. Okay, fantastic. All right. Wait Eric just now asked Japan market. If I talk about Japan market, I didn't know to sleep already. Okay, but overall, quick one. Overall, Japan market, I love it because I believe US dollar will start declining versus, okay, I shouldn't say that. I don't think US dollar will decline. I reverse it another way. I think Japanese yen will start to strengthen. I think Japanese yen will start to strengthen. You know why? Because Mr. What's his name? What's the current chief financial the Fed name? I can't remember his name. Okay. The Jerome Powell, the Japanese Jerome Powell, okay, has started increasing rate. Now, what's gonna happen when increase rate? Okay, so this one need another graph, yeah. Okay, another graph. What will happen when the Japan Jerome Powell start increasing rate? The overall bank interest rate will go up. When bank interest rate go up, more money turns into yen or run away from yen. More money will turn towards yen. Right? So there'll be more people bringing back money from overseas, because previously there was this thing called the Japanese yen US dollar carry. because the yen gives so little interest rate, like 0.1% or something like that. But then if you convert it to US dollar, you can go and get US rate at 5%. So what a lot of people did was they sell the yen to buy the US dollar. But if right now the separation between these two is no longer 5%, if Bank of Japan increase it to just a modest 2%, that means now for you to do this move, your gain is only 3%, plus you incur the FX risk. Right? Take note, Japanese people still live and breathe yen, they don't live and breathe US dollars. So is it worth it or not? Right? So that will give people a pause and say, hey, now I can get safely 2% in Japan already. Why don't I bring the dollars back? Right? I bring the yen back to Japan. Right? So I believe yen is going to increase. So back to property is I do think that whatever I buy in Japan is going to appreciate simply because yen is going to strengthen, number one. Number two is the yield there is goddamn solid. Okay, the yield there is damn solid. I'm getting net yield 8% from my Yokohama property. Net, that means I pay off everybody. I pay the government, I pay the agent, I pay the road sweeper, I pay whatever. Right? I get 8%. Right, so pretty good lah. And overall, the property price in Japan, you can get it on average 50K US dollars, 60K US dollars. You can buy one, right? So the good thing is that it's unlike Singapore where you buy one and then you hope that one really turn out well. Like pray. In Japan, you can kind of spread it out. Okay, all right. So Japan, I'll talk about it another time. It's gonna take a long time, but overall, these are my two main reasons. Why I'm going to Japan. Okay, Calvin say thank you. This is the answer I'm looking for. Fantastic, Calvin. Okay, Raymond is asking, can continue to accumulate Nvidia? Wow, that's a very loaded question. Okay, last question before we go. Wow. I love it that when you all ask question, I cannot go home, but never mind. Okay. The important thing you need to ask is not whether now you can accumulate Nvidia. I think those of you who are in stock market genius, you know what I'm going to say. What I'm going to say is, do you like Nvidia as a business? Right? That to me is the most important because even right now, Nvidia is not cheap. Okay? Even after the dip, Nvidia is not cheap. So you need to have a certain level of conviction in the business that they will really dominate the space. Right? They will really dominate the space. Right? Forward PE, to me, forward for Nvidia is very scary. You know why? Because the projection that people give for Nvidia is like this company will grow at 100% a year. Right? Which may be possible for 1 or 2 years, but can it be possible for 5, 10 years? A bit tough. Right? So if you look at their current earnings and their current price to sales, current price to book, the numbers are pretty high already. The forward one is a little bit lower, but still not very cheap. Right? Still not very cheap. So I think these are the ones that you need to have high conviction in the business. I do think a lot of companies will still use Nvidia, no doubt. Okay, so I would say at this valuation, I will proceed with a lot of caution. Even though yes, it has come down a fair bit already, but just to put it into perspective, start of the year, 6 months ago, this company was trading at half of its valuation. Just 6 months ago, this company was trading at half of its valuation. So it has gone up quite a fair bit. Is it warranted? I do think there's a certain element to it. Nvidia is going to really grow quite fast, right? But more and more, what we are seeing is that, hey, there is a shortage of data centers. The supply is short. The demand may not be always going to be there. Right? Think about it. Once you build our data center, right? So right now we are in the building phase, guys. Right? We're in the building phase. Once we build finish, guys, do you need to keep refreshing the data center every year? No need. The lifespan of data center is generally between 5 years and above one. So will the current take-up rate and the demand of Nvidia continue into the future? It's very hard to say. They are growing very fast right now because everybody is trying to build their data centers, build their AI engine. But once most people have it done already, will the what do you call it? The replacement rate be as high? That's a question mark. All right. So to me is, if you want to have Nvidia, fine, but just make sure to understand the risk and portfolio size a bit. Right? Portfolio size a bit. Okay. Okay. Fantastic. Okay, there's a few more questions. Okay, but I think we should end here. 10:07. I don't want to hold up Ethan anymore. Okay, so everybody, once again, let me just quickly show you guys Once again, I want to thank Ethan for coming on. Okay. And for those of you who need help from Ethan's side for mortgage consultation, here it is. Okay. And for those of you who want to sign up for Stock Market Genius, the link is over here. Okay, I'm gonna put both links so that it's easier. Okay. All right, fantastic. Okay, I hope that you all learned a lot from this session. I want to do more. Okay, but I only have so limited time Okay, so ultimately, who will win the game? Is it me or Ethan? Okay, you all just have to stay tuned and find out. Okay, so I'll see Ethan at the next FOMC, but I'm going to do more live stream in between as well. Okay, all right, guys. So tonight the market seems good. I wish you the very best and hope that your profit grows as well. Okay, all right. See you guys next time. Bye bye.
Yo, bye bye.